Okay, guys, hi, Zaheer Anwari here. Can I get a quick hello that you can hear me and that you can see my screen as well, please? Okay. Um, okay, brilliant. Any ideas how many people are online at the moment? Because um, I can only see myself. It says one online here. So am I alone on this webinar or are there people watching? Oh, okay, fantastic. Okay, hi guys. Um, Okay, so I hope you're all well. Administrator says there's 12 people online. It's a shame I can't. It's a shame I can't see these people because it'd be good to interact with them and answer any questions that they have. So hopefully there's something that can be improved about that. Okay, so I hope you're all well. Hope you've all had a good week so far. Just a brief background on myself. My name is Zaheer Anwari. I've been trading since 2007. Hi, AA. Okay, brilliant. If people can say hello, that would be, that'd be very useful for me, just so that I know that, I am talking to people out there, and um, yeah, just a bit of interaction would be really useful. Okay, so I've been trading since 2007. I'm a full-time private trader. I think people that come to these webinars, that is ultimately the goal that they eventually would like to achieve. It isn't the status for everyone, but people are certainly looking for consistency. Okay, brilliant. Some hellos coming through. Martin, hello. Um, so as a full-time trader, I guess my background and my story is something that hopefully you guys can all relate to in one way, shape, or form. I come from a normal background. So when I say normal, I haven't worked for a bank or an institution. I don't have a degree in finance or economics or anything along those sorts. I have a degree in software engineering. After I graduated, I worked for Oracle Corporation as a software engineer for a year. I quit. I then became an English language teacher. I did that for many years. I then quit. I became a photographer. I did that for many years. And then eventually I became a trader. So that's my journey. Software engineer, English teacher, photographer, trader. And now I'm still trading. Of course, that's my bread and butter. People always ask me, are you trading or are you just teaching? It's a very unnecessary question actually, because for me to be able to teach, I've got to be able to trade. It goes hand in hand. So my bread and butter is my trading, but I've been mentoring part time, if you like, since 2012. And now I've got a name in the arena, if you like, for speaking and the message that I'm trying to get across to people, which is, as private traders, short-term trading, day trading, scalping, intraday trading, whatever funky name you want to give it, is not the best way forward for you guys. You want to think long term. You want to have a different approach. You're not a bank, you're not a hedge fund. You don't have those funds available to you to be able to trade like that. So you need a different approach. You need an approach that is more relevant to you as a private trader. You don't want to get caught up in the marketing of all of these ex Goldman Sachs traders and ex institutional traders teaching you the techniques of a hedge fund. It just doesn't make sense and it doesn't work. You want to be smarter than that. You don't want to play into their hands. You want a style of trading that is relevant to you as a private trader. So most of you guys are probably in some kind of job, in employment. If you aren't in a job, if you haven't got a 9 to 5, if you're thinking of making money from trading and you don't have a 9 to 5, you're going to be massively disappointed, because if you don't have money, you're not going to make money. The strength to trading is leveraging a salary. You can't make money from trading if you don't have money coming through. So the strength of trading is to leverage a salary. So instead of leaving money in a bank where a bank is not giving you anything, by learning to trade, you can leverage that money to far greater sums of money than any high interest account in a bank will give you. So you must have a job. So most private traders, when they start trading, are in some kind of employment. They have a family, they're married, they have kids, they may be business owners. Ultimately, they have some kind of lifestyle. To then have to day trade along with that, it becomes very difficult, it becomes unnecessary, it becomes stressful. it's a very difficult way of trading. In addition, day trading is inconsistent because during the day you're dealing with intraday noise. The movement of price during the day is erratic. It's all over the place. Whereas if you step back and look at the picture, the market has a clear trend direction to it. So there are certain techniques and steps that private traders need to start learning and not get caught up in all of the hype surrounding day trading. It really isn't the best approach for you. So in this presentation, what I do is I share the techniques that are what I use day to day as a private trend trader. Okay, before we turn to the actual trading platform, which I'm going to share with you, if you are based in the UK, I'm actually doing a training session on the 6th of March. This is a whole day of training, and it is £99 for the day, but it also comes with a whole month of community support. Of course, you can attend the day of training if you're inside the EU, rather if you're outside the UK or even further afield. If you're unable to do that, then we have the online training, which is exactly the same. It's £99 per month, and instead of the live training in the office, we have the online training, and it's the same price. Okay, so this will be a perfect environment to put into practice everything that I share today. That involves understanding high probability environments, having a breakout strategy, a pullback strategy, understanding entry points, stop loss management, compounding, risk management, exit management, everything that goes into making what is ultimately a very good private trader. Where most people go wrong is wanting a single system that works very quickly. That's not what trading is about. What you want are various strategies that you can put into practice and then grow an account consistently year in, year out. That is the goal. Okay, and you will start learning these techniques within the training sessions that I'm doing here. And these are very unique training sessions that you won't find anywhere else, because most other training courses are based around day trading and scalping. This is all based on long-term trading for the private trader. Okay, let's move on from that. Let's go to my trading platform. Administrator, can you confirm that you can see my trading platform, because we always have an issue regarding that. So if you can see my charts, please, can I just get a yes? Yeah, okay, fantastic. Okay, so what you can see in front of you is a typical chart setup of mine. On the left is the watch list, and this is also made up of stocks and commodities. That's UK stocks and US stocks. At the top, I have the monthly chart. The monthly chart has the major levels of support and resistance. There's an algorithm and a logic that goes into these levels. These aren't just random levels. We also have the pink lines. The pink lines are the annual levels of the previous calendar year. So that's the high and the low of 2016. That's the closing price of 2016. That's the calendar year, January to December. So what I want to see is price trading outside of these pink lines. If price is inside the pink lines, for me, that's an environment where I want to stand aside. And you can see quite clearly the market is consolidating. As traders, what we want to establish are high probability environments. Nothing in trading is guaranteed. People who think that they know what the market is going to do next are fooling themselves, and they're trying to fool everyone else. It is a fact of the market that we don't know what is going to happen next. But to make money consistently in trading, we don't need to know what is going to happen next. What we need to understand is how to establish trends and how to establish levels that price can move towards. Once you can identify trends and high probability environments and establish levels, what you then want are the right strategies to be able to extract profit from the market. Technical analysis is simply breaking down the chart. So what you can see here in the webinar that I do, it's all technical analysis. This is not trading. Someone who can break down a chart is called an analyst. Someone who can consistently take profits out of the market is called a trader. Someone who is repeatedly blowing account and losing money is gambling. So just before, and this is where I think a lot of private traders go wrong. Uh, what most private traders do is they go online, they download a free trading platform, usually MetaTrader. They go to a broker, they open a demo account, or they open a small account and they put £50 or £100 in there, and they go and find free information on the internet, usually some kind of free forum, which is usually offered by a broker. So if it's offered by a broker, they will encourage you to day trade, as they want their spreads and their commissions. And so what most traders have is this very flaky foundation to their career. It's all based on free software, free trading platform, free knowledge. And they then bestow this title on them of trader. That is not what a trader is. A trader is someone who understands market conditions, understands market environments, understands when to trade, when not to trade. A trader is someone who can identify an edge. A trader is someone who can explain their edge in a very clear and concise way. If you don't have an edge, if you can't explain to me what your edge is, then you don't have one. And if you don't have an edge, you cannot consider yourself a trader. There is a clear distinction. What you want to be saying is, I'm learning to trade, and then saying I'm a trader once you've achieved consistency. If people start removing the ego and start approaching this in a more business-like manner, then there would be far more private traders seeing success at this, rather than the huge 90-95% that we hear are consistently failing. So you want to be able to start, and this is crucial, understanding environments, high probability environments. Understand when to trade, understand when not to trade. When price is inside these pink lines, I do not trade. What I'm looking for is for price to be trading either above the high. This is where price has a bullish bias, and I start looking for long opportunities, or below the low, where price has a bearish bias, and I start looking for shorting opportunities. I also have the weekly and the daily time frame. The weekly time frame, I have the 200 moving average, which gives me the bias in price action. So this is a logic that we use within our dynamic trading community to establish whether the overall bias is bullish if price is above the 200, or bearish if it's below the 200. On the daily time frame, I also have the 200 moving average, giving me the same logic. So bullish above, bearish below. What I want is alignment between the weekly and the daily time frame. So the monthly gives me excuse me, the monthly, sorry guys, just grabbing some water. The monthly gives me areas of support and resistance, and tells me when price is above the high or the low of the previous calendar year. Once I've established that, I can then look at levels that price can move towards. So levels are round numbers, 0.9, 1, 1.1, 1.2. That's 1,000 pips between round numbers. The weekly and the daily time frame will confirm this and give me a clear direction to the market. So I want to be above the 200 moving averages in a bull trend, and below the 200 moving averages in a bear trend. In addition, if you'll notice, I have this trend filter. I don't have the standard red and green candlesticks. I have red that are giving me areas of bearish trend, green bullish trend, and black where we're in a consolidating environment. So below the 200 moving average, I'm looking for the trend filter to be red. Above the 200 moving average, I'm looking for the trend filter to be green. So if I put this all together, I can now start establishing my edge. So let me give you an example of a currency that I have been long on for some time, is the Turkish lira. So if we look at the Turkish lira is above the high of 2016. Well, it's kind of pushing into it, so it's using as a support level. But having said that, I've been long on the Turkish lira since 3. So this is going back to last year. So when I started opening long positions on the Turkish lira, which was 2016, I was above the high of 2015. So if I just go into the back end, and if I just say that, what we can see here, if I just expand the chart, this pink line here, this is the high of 2015. This pink line up here, this is the high of 2016. So you can see that when price started trading above the high of 2015, which was above the round number 3, I started opening long positions. If we look, we can see that the market is in a very nice bullish trend to the upside. And when price cleared above 3, I wanted to see price move towards 4. And we can see that price has done exactly that. Now, if we go to the weekly, price was above the weekly 200, giving price a bullish bias, and the trend filter was green. So you can see here is 3, the round number, and it was around this area here where I started opening long positions. Look at how my trend filter has remained green all the way through, apart from recently where it's turned black. But if we ignore the last 2 weeks, we can see that it's been green for many, many weeks. If we go to the daily, also above the daily 200, and the trend filter has predominantly been green. Now, there are areas where the trend filter turned black, but as long as the bigger picture, which is the weekly, remains green, I don't need to worry about these black environments, because remember, the lower down you go, the more candlesticks there are, the more noise there is to deal with. So as long as Big Brother starts to turn green, as long as Big Brother, the weekly, remains green, I don't need to look to exit my positions. What we can see now is a pullback, and it's on this pullback where many would have been stopped out. Okay, so what I'm looking for, guys, is my edge, and this is exactly my edge. I'm looking for alignment between the monthly, weekly, and daily timeframes. I'm looking for price to be either 100% bullish or 100% bearish. If I have anything that isn't in alignment, I look to stand aside. So if we go back to the Aussie dollar, US dollar, let's look at the euro dollar. If we have a look at the euro dollar, we can see that the euro dollar, and I'm just going to remove these pink lines. Okay, so if we look at the pink lines, if I just expand the chart, we can see that price is trading inside the range of 2016, and quite clearly the market is consolidating. Here is a trend, here is a consolidation. The art of trading, and a trait to a good trader, a skill to a good trader, is knowing when a market is in trend and knowing when a market is in consolidation. You should be able to see this right now. Trend, consolidation, trend, consolidation. It's in these environments where you want to be standing aside. Don't get caught up in all the hype surrounding the euro dollar being the most traded currency. Look, it's a very simple thought process, guys. If the euro dollar is the most heavily traded currency in the world and most private traders fail, what does that tell you about always trading the euro dollar? A good trader knows where the money is. Now, 2016 saw the euro dollar in consolidation. We can see that right here. It's just gone sideways. In comparison, if I bring up the stock of NVIDIA, this is what NVIDIA did. And I have been long, and I still am long. I've been long on NVIDIA since it broke the all-time high of 2007 at $40. Once price broke and closed above the all-time high, I started entering long positions. So you can see that while most people have been trying and failing throughout most of 2016 trading the euro dollar, I've made very, very, very good profit on the stock of NVIDIA. Okay, so understand where the money is. Understand how to identify where the money is. Don't just get caught up in foreign exchange. Sometimes the whole market, so currently the foreign exchange market is going sideways. It's stagnant. There's nothing going on. So if the foreign exchange market is stagnant, where is the money? Well, it's in stocks. So I've got position running on US stocks, which I've just shown you. And my best performing stock so far, UK stock, is CAS Minerals. So you can see now on the monthly time frame how this is creating new highs, and look at the potential reward to the upside. Trading is all about thinking in terms of risk to reward. You want a small initial risk for large compounded reward. If you're wrong, you get out with a small loss. If you're right, you want to hold and compound until price reverses. The trend is your friend until the bend at the end. This is the best way forward for private traders. Now, if I'm looking at the monthly, weekly, daily time frame, how my routine as a trader is, I spend half an hour to an hour at the weekend doing analysis and preparing for the week ahead. So this is what I call in-depth analysis. But in-depth analysis involves my software where I have scanners that will scan through markets for me and give me all the best opportunities. I then manually shift through all the opportunities that the scanner has presented, and I then filter that down to the best of the best. This whole process takes me an hour, which I usually do on a Sunday evening. Once I have done that, Monday to Friday takes me no more than 20 to 30 minutes a day, sometimes far less depending on what the market is doing. If you look at the weekly, the logic is exactly the same. Above the weekly 200, trend filter has remained green. It's now currently finding a little bit of resistance at the £6 mark. So this is 600 pence, which is the £6 mark. And if we go to the daily, above the daily 200, the trend filter has predominantly remained green. Now, there are areas with it where it has changed color, but if you look at this, what do we have? If I get my resistance line, what we have is a cup and handle. Now, for you guys that are familiar with chart patterns, a cup and handle formation in a bull trend, when confirmed, and when I say when confirmed, what we need is a breakout. A cup and handle in a bull trend is a continuation pattern of the trend. So we've had a bull trend, cup and handle, bull trend. You've got to be able to understand the signs of what price is telling you. Rather than trying to fight the market and battle the market, what you want to do is align yourself with the market. When you align yourself with the market actually tells you what to do. It will tell you which strategy to use. It will tell you where you should be placing your stop losses, when you should be compounding, how you should be trailing your stop losses, when you should be collapsing or tightening your stop losses. The price will tell you everything that you need to know. Where private traders go wrong is that they're always trying to predict what will happen next. And most are trying to predict using lagging indicators like MACD and RSI and stochastic. These are old, outdated indicators that good private traders do not use anymore. We are far better at understanding what price is telling us, and we have far better tools that can make the journey far more pleasant and far simpler and far more profitable. So start understanding the natural features to price. Now, even this, if you have a look, we had a cup handle, we had a breakout. Now look what happened following the breakout. Retest, inside bar, and a bounce. This is classic price action movement. Cup and handle, pull back to retest the resistance turn support, inside bar, which is the black bar, and then a bounce up and a continuation. Now what are we having? Well, all we're finding is resistance at the £6 mark. This is not a reason to be panicking. This is not a reason for me to be closing my positions and taking profit. This is a small move in relation to the overall trend. And if you actually look at the structure of the trend, it's full of pullbacks. Here's a pullback, here's a pullback, pullback, pullback. This was a deeper than normal pullback, but fine, that's expected. Came to support. So it's not like it just went to a random level. It came to a support zone. Bounce back up, resistance, handle, broke through, retest, inside bar, bounce. Trend towards £6. Indecision, reversal. It's now finding support at a previous resistance. What we're now looking for is a bounce back up to the upside. Once price breaks and closes above this pivot level here, that's the highest point right there, then this will be a sign of a trend continuation. So what am I doing here? Well, I have positions running from around this level here. I have multiple positions running. I have 5 positions running along this trend. I hope you guys are really understanding what I'm talking about here. Okay, I have 5 positions running along this trend. So there's my first position, there's my second, there's my third. I'm just drawing this very roughly. These aren't actual entry points. I'm just giving you guys an idea to visualize what I'm talking about. I've got 5 positions running. Each time the first position starts returning me a profit, I add. When the second position starts returning me a profit, I add. Then again and again. So what do I do here at this point? I simply wait. I apply patience. If it continues to weaken, I'll have a stop loss that will stop me out. And price may even come back to retest the £5 mark. As you can see, price likes to react to round numbers. So we may even see price come back to the £5 mark. But ultimately, what I favor is a trend continuation. And the trend continuation is a break and a close above this resistance. And that's when you can either enter if you're not in this, or you can look to compound and add another position. So this is a trend. Whereas if we look at the euro dollar, we go back to the euro dollar, looking at the monthly chart, it's in consolidation. So we looked at 3 charts. We looked at the euro dollar, we looked at CAS Minerals, the UK stock, and Nvidia, the US stock. 2 of them are in trend, which are both stocks. And this one, the euro dollar, it's in consolidation. It's a currency. And if we go across the board, let's have a look at the pound. Pound is in consolidation. 1, 2, 3, 4, 5 months. It's just going sideways with 1.2 as support. If we go to the dollar yen, we had a move, we had a pullback, and it's just going sideways. What we need is a breakout, and you can see that in more detail there. It's just a messy consolidation. Here is a trend, and look at where it came to. It found a 1, 2, 3, a 1, 2, 3 top, and then a move to the downside. Now this 1, 2, 3 top didn't happen at a random level. If we go to the monthly, you can see that the pink line, the closing price of the previous calendar year, that's 2016, that's acting as a resistance level. And that's what caused the 1, 2, 3 top and a reversal in trend. If you guys aren't familiar with 1, 2, 3s, then become familiar with 1, 2, 3s. I'll explain what a 1, 2, 3 is. If I just draw that point there, what you can see is that you have a 1, and then this point here is slightly lower than this point here. So if I just open it up, see the this black bar here, you can see that there's the wick is slightly lower than this blue line, which is the high of this bar. Almost like a double top, but it's slightly lower. That is what is known as a 1. The 2 is the pivot low. The 3 is this high point, and then this red bar breaks and closes below the 2. Once price breaks and closes below the 2, that is known as a 1, 2, 3 top. And a 1, 2, 3 top at a support level is a sign of a potential reversal. And that's what we've had. But since the reversal, it's gone into consolidation. The consolidation has been in play pretty much since January, I'd say. So just again, not a very good looking chart. If we look at the bigger picture inside the pink lines, above the WVI, above the weekly 200, above the daily 200, trend filter is black on the weekly and red and black on the daily. This just, it's telling us consolidation. If we have a look at the Aussie dollar Swiss franc, now the Aussie dollar Swiss franc is one worth keeping an eye out on. So we can see now that price is looking to push through the pink line. It's trading above the pink line, so it's starting to have a bullish bias to it. And if you look at the potential risk to reward, we have plenty of space to the upside. In addition, it's broken through this major pivot level, which is now acting as a support level. So this may be a good foundation for the trend to move to the upside. The only aspect to be wary of is the fact that we have this round number here. And round numbers act as areas of support and resistance. In addition, prices at the weekly 200. What we need to see is a close at the end of the week to confirm either where price is in relation to that. So if price breaks and closes above this level, that's a good sign of a potential further move to the upside. Daily, above the daily 200, trend filter is good. So everything is looking interesting. Everything is looking interesting. Price is trading above the pink lines. It's above the weekly 200. It's above the daily 200. Trend filter is green on the weekly, green on the daily. It's ticking all the boxes. What we now need is an entry point. And so for me, what I would like to see, first of all, is price to actually hold above the pink, the weekly 200. And for price to hold above the weekly 200, what I'd like to see is a break and a close above this level. Excuse me. Let me remove that. Okay, what I want to see is price break and close above this level and the weekly 200, and also the round number 0.8. So I'm just trying to find where the pivot level would be. Yeah, around that level there. Okay, so that high, which is in relation to 0.8, this whole zonal area, once it's cleared, then we can look for moves to the upside. And I'd like to see price move towards the figure 1, which is a major level of support and resistance. Okay, and if we actually open up the monthly charts, you can see 1, you can see that it is a major level of resistance going back many years. Okay, so the monthly chart is one that is starting to display interesting moves to the upside. Aussie dollar, Canadian dollar, you can see it's inside the pink lines, very much in an area of consolidation, above the weekly 200, above the daily 200. Trend filter is black on the weekly, which is not a good sign, but it's green on the daily. Still, until it actually clears outside of consolidation, this is not something that I want to be looking at. Let's have a look at the Euro Aussie dollar. Euro Aussie dollar was looking fairly interesting, and you can see why. Trading below the pink line, but look at that, holding at that support level. Tried to push through it. You can see the wick, but that support level is holding strong so far. So that's why you don't want to get in too early. What most private traders do is they enter intraday on a break of a support or resistance level, and then price reverses by the end of the day and stops them out. If they're not using stop losses, then it could be a hair-raising journey. Below the weekly 200, trend filter is red. Below the daily 200, trend filter is red. So this is looking good. However, we want to see this support level cleared and then start looking for shorting opportunities. So I'm not actually short on this. I am short on the Euro New Zealand dollar. So let's have a look at what's happening on the Euro New Zealand dollar. So if you look at the Euro New Zealand dollar, risk to reward was far better than the Euro Aussie dollar. The Euro Aussie dollar had priced directly above support, but we can see that the Euro New Zealand dollar has a good 1,000 pips potentially. So I started entering when price had closed below this level on the daily time frame. However, since then the market has reversed. Below the weekly 200, trend filter is red. Below the daily 200, you can see how it's just going sideways, red and black. So price is stuck in a mini consolidation. I entered on, if I just draw that there, I entered on a break and a close of this pivot support, which was around this level here. So you can see that price triggered me in, went against me, went in my favor, went against me. It's just going sideways. My stop loss is wide, so there's plenty of space for this to move, but I would like to see price move further to the downside. So a break and a close below this level will suggest a trend continuation. Okay, so I'm short on the Euro New Zealand dollar. I'm short on the pound dollar, which was in on a pullback. So if you go to the pound dollar, I've been short on the pound dollar since this point here, but we can see it went into a trend pullback. It's just going sideways, hasn't gone very far. I am in a little bit of profit. I'm also short on the pound Aussie dollar. I've been short on the pound Aussie dollar since this high point here. So I moved to the downside. Look at where it failed, 1.6, bounced back up. Now look at this, 1, 2, 3, a 1, 2, 3 top confirmed, and a continuation further. Not the best continuation, but 1, 2, 3s are very good to identify. If you look at this area here, if I open up the chart, here's your 1, here's your 2, here's your 3. So a 1, 2, 3 at the 200 moving average, which is a resistance, and we had a move to the downside. Okay, so you want to be keeping an eye out for 1, 2, 3s because it's a very good sign of either a trend continuation or a trend reversal. Okay, I'm also short on the pound New Zealand dollar, and you can see that the pound New Zealand dollar I've been short since this point here. Since then, consolidation, a bit of a move, another consolidation. This is the foreign exchange market for you. It's range bound. So my advice is, if you're not trading stocks, why? And if you're not financially in a position to be trading stocks, that's fine. But don't trade foreign exchange just because you can't trade stocks. That's the issue here, is because people want to trade. People have this understanding that money in trading is like a 9 to 5. I can make money every single day. That's what you're told. That's what you're sold. But you don't make money every single day in trading. You have to make money in periods. Understand when the markets are profitable. Understand when they aren't. When they aren't, stand aside. When they are, take trades. Okay. I think that's everything that I wanted to cover. So again, in summary, if you want to join the community, if you want to do the training on March the 6th, guys, please check out zaheer.live/seminar. If you want to email me for any details, zaheer@zaheeranwari.com. So it's just my name, zaheer@zaheeranwari.com. Okay, so 6th of March, guys, my classes aren't very big. I like to do small, intimate group classes. I don't like to do huge group classes. So there's never more than 10 to 20 people in a group. The last 2 sessions were sold out pretty quickly. This is now the 6th one, and spaces are already getting booked out. If you want to join the community online and do the training, please go to apprentice.live/Zaheer. If you're on LinkedIn and you want to add me on LinkedIn, please feel free to do so. Just search for me again, my name, Zaheer Anwari. And if you are on Facebook, please add me on Facebook. I've got my own Facebook page, which is City Trader Lifestyle. So just search for me, facebook.com/City Trader Lifestyle. You can add me on Facebook. I put a lot of stuff up in here on Facebook. Also, if you're here, if you're in the UK, I'm actually presenting on Friday. I've been invited to present at the London Forex show. I'm doing my presentation at 9:40. If you would like to attend, by putting in the Dynamic FX 17 code into this form, you get a free ticket, saving you £25. Okay, so if you are in the UK and you'd like to attend the Forex show, then please get in touch. But other than that, it's something that I update on a regular basis. In addition, I do periscopes on trading. I do Facebook Lives on trading. So please follow me. I should actually bring up my Medium blog. If you haven't read my Medium blogs, guys, then I would highly recommend going to medium.com @Zaheer Anwari. Lots of blogs up there. I update them pretty much every day. Usually either something that I'm in, stocks that I'm looking to be in, or also little hints and tips that make a good trader. So doing pretty well. I've got 1,000 followers, well, over 1,000 followers now, and I've been on here for about 5 or 6 weeks. So it is gathering momentum. Okay, I think that's everything. If there aren't any questions, let's end the webinar here. As already mentioned, zaheer@zaheeranwari.com. Please email me if you have any questions, or if you'd like to know more about the training which is taking place on March the 6th here in London. Okay, guys, thank you all very much. Administrator, thank you, and I will see you next week. Okay, take care, guys. Bye.